How you guys doing today? Today is May 8th, 2021. It's a Saturday. If you're new, you're like, why is this man making content on Saturdays? Well, because there's such a lack of explanation behind macro level movements in the market that it's almost astonishing. How your usual YouTuber is like, let's talk about Dogecoin, let's talk about Bitcoin, let's talk about blah 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 and IO and blah blah blah. If you don't understand how indexes work or how sectors work or what sectors there are or what a business cycle is, you're shit out of luck, my dude. None of that's gonna matter. You could have the perfect stock at the wrong time. Hashtag PLTR. Sorry. So, if you are interested in major indexes, if you're interested in a man screaming about stocks to you, if you like a guy who wears the same shirt 2 days in a row, I'm doing laundry. Okay? I don't want to make a clean shirt dirty. I'll just wear this for now. Okay? If you enjoy this kind of content, like, subscribe to the bell notification. Otherwise, what we're gonna do today is dive hella deep into some really important topics, considering that most folks have no idea what I'm talking about when it comes to these kinds of things. So I'm going to talk to you all about sectors, indexes, and the overall market. So we're going to look at some nice examples for you as I fix the window. And we should be all good to go now. So that being said, let's get into it. So first off the bat is this beautiful website. Now again, I can put this in the description box. I have a whole lesson about this. But this speaks volumes. The last 200 days, tech is 0.62 up, but industrials, materials, and energy are still up. What's also interesting is that the ones I'm focusing are down, but we'll see as we get closer to today, they are far less down than they were before. So why is this important? Again, I have a whole video on this, but what I'm monitoring, last 30 or 60 days, again, you can see if I go through most of these numbers, tech is not it. Right here is it. So if I'm swing trading, I'm focusing industrials, sort of, but materials to real estate. This is where Day is gonna, butter his biscuit. It's gonna be good stuff right here. We scroll down, we can see the market cycle, which is blue, and it's orange, idiot, and then the whole entire business cycle is blue. And so if we can determine where on here we are, which we're gonna do today, I'll help you make your trades a little more accurate. So the first thing you want to see is this. This is the business cycle from Fidelity. It just dropped. This is if you're in small tech growth, this is not what you want to see. This is not me being mean, but it is what it is. Well, let's watch this. So United States is right here in the green one. Watch this. 4, 3, 1. Bump. It didn't move. Uh-oh. If you're in tech, that's not good. One more time, so you can see what I'm saying. 3, 4, 1, 2. According to Fidelity, and again, it's one resource, you should do your own research, we have not moved on the business cycle. And so the shit I was talking about 2 months ago is still going to be my focus according to Fidelity. To dive more into it, the consumer confidence. If you watch another video, this was 19 points. Now it's 12. Folks are still up. Okay, that makes sense. Our GDP, no thanks, was negative. We're showing some improvement, okay, but still pretty low. Or it was negative, it's coming back. Now again, the last year, all right, it's still dipping. So let's not get over ourselves. It's still dipping. We're coming back a little bit, but again, it's still coming down. And then, the TNX again is still rising somewhat. So if you come back over here, okay, boys and girls, all right, this is the stages. Consumer expectations, rising, reviving. So again, they're still in this area, which again would put us in early recovery, which would be here, this area. Logical. Industrial production. I'm not going to look into that intensely, but again, it is dipping a little bit. So falling flat, sure, maybe rising. I mean, I guess you could say rising. It's kind of curling off. It's a bit of a mixed bag for that one. So anywhere in here. So we're not over here, but we're somewhere over here. Sure. Interest rates, again, are rising now pretty quickly, so I put it somewhere over here, and our yield curve is normal, so it's about here. So all in all given together, we are somewhere from early recovery to early recession, but more likely full recovery to early recovery. We're here, which is also emphasized with the 200 days we've been watching. Boom. Best sectors. 1, 2, 3. We're right here. Okay, so if I'm swing trading, if I'm day trading, I'm not going to be buying small tech growth. That's not going to work. Now, these industries, these indexes, these sectors are not created equally. Now, if you look at technology and financials, massive. Look at utilities, baby, small. So when I look at this chart, there's about 250 utility tickers. You're gonna have a lot less slim pickings, but with staples, electricity, healthcare, these are all gonna be winners. Financials have been going off the charts. The last 30 days, we can see, again, we've been having some real big winners. Technology is down. It's being a huge sell-off. QQQ is down. But again, our bread and butter for these next few weeks, until we kind of maybe see some more movement, will be industrials, materials, energy, staples, healthcare, utilities, financials, and real estate. Now, there will be some discretionary pumps just because of the COVID coming back, and then technology is always going to be okay. But you should be focusing probably industrials, utilities, anywhere in here is fine. I will throw in financials because they've been doing so well, and then real estate for the opening up of COVID hotels and cruise lines and shit. So anything from industrials over will be my focus. Mainly in the middle here. Materials to healthcare will be daddy's bread and butter. So with that being said, let's actually check out the charts and see what they're saying, because again, I'm not saying that energy is going to do better than technology. No. What I'm saying is, given this theory, which I follow and I'm successful, so I think it's okay, industrials to real estate should gain more than the S&P and lose less than the S&P. So again, not every ticker is going to be created equal. You may be like, well, he said buy energy stocks, so that's all I did. And then you lose and you get mad at me. I'm not saying these are perfect. I'm not saying that they're best, but I'm saying that given the... I said Chipotle and I'm dying. Given the sector rotation, that'll be my focus. With that being said, let's check out the indexes. So off the bat, if you hear someone saying, it's a bear market, I'm scared, dude, and they're on YouTube, tell them to shut the hell up promptly. I mean, are you serious? I mean, is this a bear market? Are we terrified? Are you scared yet? Again, this is well overdone. All right, this was a steak. It's well overdone, right? And we like medium rare around these parts. This is a fine looking chart though. We're getting up there. What we're looking for now, and it may lead to a few tough weeks. We got our higher high. I'm talking about this all the damn time. Now we got to find a higher low. Is that going to be here? Now again, this is now relevant still. This is my temporary support line. Is that going to be here? All right. Is this going to be our next support area? If this is our higher low we're aiming for, we have to come down almost a whole %, which could be 3 or 4 days of bleeding. So we're not going to be bearish, but we're not going to get overly euphoric if you're listening to me as a person you listen to. We're very high up here. I think as soon as we get, another 0.5%, I calculated 0.45% higher, you should be preparing some form of bear strategy. Some form of bear strategy. I'm not saying you have to go short every ticker. That's what dumb people do. What I'm saying is once we get up high, real high here, we've inverse bear ETFs, shorting a sector like COM would make some sense right up here, or individual tickers that are really overbought. Think of what you want to do before you have to do it, right? Failing to plan, planning to fail. If you know that we're going to have a possible red day coming, because look at, you take the stairs up, everybody. Oh, look at these nice little stairs up. Boop, 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 boop. Elevator down. Stairs up. Elevator down. Oh, these nice little stairs up. Elevator down. So every time we're going to dip, have your bear strategy prepared for those kinds of days. You want to have nice stairs up, elevator down. Because when it gets red, it will get red quick. It'll get red intensely. But overall, very bullish on the S&P. Looking great. This melt up should be continuing until hopefully the end of summer to some capacity. But again, we were very far up there. I'm sure in October we'll have a whole different tune when that government budget comes out. But again, dash yes, pick your spots. But if you're going to be afraid of enjoying a bull market because you're scared, this is a time to not be scared. Now, this is again a macro view. I think in the next few weeks, it could be down here, up here, over there, upside down, whatever it is. I wouldn't necessarily be throwing money at the S&P this far up here, but when we pull back eventually, it should be a fine purchase. Again, very bullish on the S&P. Nasdaq is much of the same. What's interesting about the Nasdaq is that I am watching to see if this shape is going to hold. I kind of hope that it does, but I will not be shocked if it doesn't. Again, we're breaking below here more often, so I'm going to be on the lookout for this to kind of start curtailing off and going more horizontally. I wouldn't be all that salty, given the fact that if it does start to do that, it's a much more consistent uptrend compared to like this huge one. And again, this is almost like a perfect new channel that's forming. So if I see that, if we do come down here again one more time, tap down and come back up, I'll probably switch my charting up a little bit. So be prepared, be dynamic. But given that this price structure this channel holds, this is a glorious amount of room to run up. So this is holding as a support. If it does, you have 4 or 5% to make a full move. I think it's gonna make a full move. But again, this is lower low, higher low, higher low, higher low, higher low, higher low, higher low. So as long as we hold above like 12,750, we're bullish. Then again, pick your spots. The elevator's down, have your bear strategy right by the Nasdaq. Again, fully bullish, great value. Be considerate, do not be over euphoric, but again, that's a great sign. The Russell historically goes more horizontally. This is kind of what it does. I mean, it's always been one that kind of like goes horizontally and then it kind of comes off. But again, it's a newer index anyway, so it's not really supposed to be like some big old thing. But this is again starting to kind of consolidate, and that's not a terrible thing if we have a plan to accordingly address this. I do not think that this channel is going to survive much longer, just given the fact that it's not the strongest drawing in the first place. And again, I don't think I did a bad job, but the Russell 2000 is so much more volatile, given that it's more mid caps, that I think we have a chance of really breaking this and this becoming a new horizontal channel starting here, which again is not bad. Horizontal plays for technical analysis are delicioso. So let's keep our eyes on it. Let's just go off the fact that we have higher lows, boom, 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 across the board. We have to establish a higher low eventually. It could be 2 or 3% down. We broke this downward trend line. That's gone. See ya, nerd. Get out of here, punk. So we have plenty of room to run up still. But again, let's not get overly bullish quite yet until we have a break of this hard resistance at 2310. Once we break that, we kind of get back above this regression line, we could be in good business, because as of right now, this regression line is not going to be correct. It's really not. There's way more action below this regression line. So I'll probably reset it soon, but the Russell 2000, given if this price action holds, which we'll do until evidence that it's not, great value. Huge day on Friday. I like it a lot, but not as much as I would like it if it was a more properly charted for this kind of 6-month time frame, but not bad at all. Last and not least is the beautiful Dow 30. Now again, you have to you gotta dig deeper for these kinds of things. The fact that the Dow 30 is absolutely fucking crushing it, undoubtedly smashing everything, will also help us line up to this. What's our focus going to be? Oh, industrials. Oh, materials. What's this called again? Oh, the Dow 30 industrial average. Oh. So that again kind of proves to some aspect that we have a nice volume headed towards industrial stocks. Now again, these are not full industrial, but again, that lends me to believe if sector rotation is correct, we're doing the right thing. Secondly, small tech growth is not getting the volume that it needs, but we have almost 100 million trades a day at these stocks. What's PLTR's average volume, if I could spell? It's not going to be that, I don't think. We'll see. Again, this is an example. Let's see. It is 22 million. Okay, CCIV. What's that at? Oh, it's definitely down to like maybe 3 million, 8 million, right? What's Tilray? Oh, what's a weed stock, but not that high either. So, if you're going to want to get into small tech growth technology sectors right now, you're going to have a great value. Honestly, you'll have a fantastic value. But opportunity cost to me dictates we should go where the money's headed, where it's going, right? There's a bunch of fantastic stocks in the YM that pay dividends, that pay great returns. I mean, it's fantastic. Why would you be focusing something like the small growth tech when sector rotation says not to, and then additionally the volume's not there? So again, this is always a fantastic purchase. I want to get my Dow 30 stocks close to the regression line. Like, this would be a perfect spot to buy in. And again, I didn't change these lines. That's a perfect play right there. So if you can find some great value on these stocks, fantastic. If not, let them run until we get a lower price. But again, this is a nice indication that sector rotation is correct, and small growth tech may be in a world of hurt until we see some life. And again, that could be any time. I don't know. It could be tomorrow. But until we see some life, I would not be buying into it. Last is the VIX. It's coming down on support area. I would suspect Monday through this week we'll see some spikes. I mean, this was a huge sell-off. It doesn't really sit down in supports for that long. So again, Monday, be prepared. If you know what the VIX is, look into it. Last is our, we talked about this in the beginning, our 10-year Treasury Notes. Again, it usually hangs around 15. That's kind of our usual, is 15, 16 bucks, and we're at 15. So we really bottomed out there, but this is not a bad spot to be. If it starts to spike again, I wouldn't be overly concerned. But again, if you can time a TNX spike with a VIX spike, you'll find great value, but also you can save yourself a world of hurt by jumping in too early. And again, when those start to spike up, instead of being afraid, we're looking for deals. Right? VIX is up 10%. Everyone else, oh, I'm so unsure. Oh, geez, oh, boo. They get all scared. What we do is we go, shit, if they're scared, we greedy. All right? If they're getting all spooked out by this, I'm trying to find my deals, my entries. So again, I wouldn't be too quick to buy anything on Monday or Tuesday. But if that VIX spikes 10% and folks are terrified and selling, I'm first in line to buy. With that being said, let's check our indexes. Let's go through all, we already did that. Let's go through our sectors and see what's up with those real quick. So first is going to be materials. Now, sector rotation, materials. Oh, who knew? Oh, who knew? Made a huge move up. So that again checks out. Now I don't think that materials has a massive amount of room left to run up. I would suspect there's going to be a big sell-off soon. It kind of does that, right? It gets up too high, big sell-off, big sell-off, big sell-off, big sell-off. So I'm not overly bullish on materials this week, but there are going to be some material stocks that will be at value that you should take advantage of. So this week, technically speaking, I'm not in love with materials, but sector rotation speaking and value speaking, if there are material stocks that are at a good price, it kind of makes sense to check them out. I'll prioritize materials over a lot of different sectors. Again, a huge week. Let it run its course. But again, materials looks fine from a philosophical fundamental point, but technically it's too high. If it has a huge sell-off in the next few days and comes back down below this regression line, materials will be A1 if that happens. Next is comm services. I don't like comm services. I don't like them at all. Bump, bump. So comm services, again, is probably the worst pick for our sector rotation philosophy. And again, this is all this whole church over the goddamn place. I mean, it makes no sense. I mean, it's a newer sector. I mean, it doesn't really do what I want it to do. But like, this is so choppy and like, there's no volume. I don't love it. So I mean, it's up there. It's towards the top. I even said beginning of last week, which should have been here. Hey, I was short comm services. Hey, it shit the bed. So once again, I would let comm services make a small run up. Okay, they hit this line again, and Papa will be first in line to short the shit out of comm services. When it comes back down the regression line, sure, look to buy it. But this high up here with sector rotation not being in favor, comm services for me this week, a strong short when it gets a little bit higher. I don't love it. I don't like it. Not my thing. Energy. It's almost like I was over here saying, hey, probably a good idea to look at energy. Hey, probably a good idea to look at energy. Hey, probably, and wouldn't you know? And again, am I a genius? No, I just do a little bit extra due diligence. Oh, look at that. Winner, winner, winner. Look at that. Love it. So I love the fact that it's making this huge move up. Again, we're getting towards resistances here. So it may be there may be a rough day, a rough week for energy. But again, overall, massive move up. It is important to also note, energy has been on the decline. All right, the last few years. It's on the decline. Now we still have plenty of room to run up to hit this. We have plenty of room to run up to make a consolidation. Look at for like almost from 2016 to 2018, it was a beautiful, beautiful channel back and forth, up, down, up, down, up, down. Right. So I wouldn't put a lot of emphasis in the fact that it keeps going down. But for now, energy, until I see a reason for it to stop running, I'd be into it. I mean, you could do your technical analysis the way you want to do it, fundamental analysis you want to do it. But until I see a really big sell-off day that comes back down, energy. Could be a good purchase this week. I like it a lot fundamentally. Below the regression line, a lot of room to run up. Which again, I mean, it doesn't always do, but you can even imagine 13%, which is done before from down here. It did a 48% rush. Hey, again, let's not plan all of our eggs in one basket. But if energy does this again this week, pop a like. Financials just had their earnings, and most of them beat it and did just fine. Very bullish on financials. Again, if we're looking at our sector rotation, it's over here. It's been crushing it. So it will cool off eventually. Let's not put all of our eggs into the bullish basket. It will hit this support line coming up soon, the resistance line soon, this trend line, and it may kind of die off. That may be the time you stop buying it. Let it run up, another 2 or 3%. It hits that. Find some overbought financial tickers and prepare to short them if it matches the index. If the S&P hits that top of the trend line the same exact time this does, let's say we come up here and hit this trend line up here, at the same time financials also hits that one up here, that's a clear indication to me of a good opportunity to scan for some overbought financial stocks and prepare a bear strategy. Again, playing 4D chess when everyone was talking about Dogecoin trying to get clicks. Losers. So this is definitely a great industry. Love it. Again, very bullish, but if we get too overbought, look for some opportunity. Industrials. Zoom to the moon. So this is getting a little bit overbought. Okay, so I wouldn't get overly bullish this week in particular just because it had such a huge run up. But I mean, until I see a reason for this to stop. Do I see one? I don't see one. Why would I become bearish for no reason, right? It has plenty of opportunity. It's hit up here before. Okay, it's come up even higher before. So it may pull back. That would be perfecto if it comes back and pulls the regression line, and we can do this all over again. So industrials long-term very bullish for the next 2 or 3 months until rotation of sectors dictates otherwise. Until then, pick your spots. It could be lower, but it could also be much higher. So I think industrials, let her pull back, okay, before you really go balls deep into it. But again, a great sector to watch this week, especially with the Dow 30 being so high. Oh, technology. So technology is interesting because it's not created equally. These sectors are not going to be like across the board, like all tech dies, all tech goes up. It's interesting that PLTR shits the bed, but Apple follows this almost to a T. Look at that shape. Look at that shape. Should be similar. Tesla, very similar as well. Tesla's also getting a value. If Tesla hits this area in the 650s, pop a like. So the sell-off of tech has been happening. It's actually interesting. I put it in my Discord. There's actually an interesting article that says this was the largest software sell-off in like 5 years. So technology is going to be a different animal. It should be discussed in its own basket of like content because it's so different. Technology has volume, but technology volume is not going in the same spots. In my opinion, not you opinion. In my opinion, blue chip and large cap tech makes a whole lot of sense. If you can really let the sell-off continue and you can find your entry point to get value in a long-term hold, that's much more logical to me than trying to swing or day trade a software stock or like a robotic stock that's just dying off. Right? It doesn't make any sense to me right now. But this is again where you kind of have to kind of balance value and just volume leaving. A lot of these tickers and technology are going to be at a fantastic value this week. And again, I think that was probably more towards a Wednesday, Thursday thing for his push-up that they would have been at a great value. So if you can find a good value on these tech stocks, you can see if this does hold, which is a very beautiful channel, if this does hold, we have a lot of room to run up. I mean, it does tap up here quite often. We have a good 5-6% of the whole sector to move up. That's a great gravitational force. So again, do you extra due diligence because these should not be in favor with sector rotation for the next 6 months. 4 to 6 months. It may be rough, especially given that May, June, July, August, and September are not going to be better months for stock picking and swinging and day trading in general. So pick your spots, do your extra due diligence. Technology, great value, but if this is a sign of what's to come, you may want to avoid it. All I'm saying. Consumer staples, again. Right in the middle there, pop a like. It's, again, pushing resistances. It's been having a huge push up. But if we haven't moved on the Fidelity, business cycle and this all checks out, it can break above this pretty easily and keep running. So I think that we may see a melt up. Okay, this is very nice for about a month here, and it came back down. Again, came up, came down, came up. So I think it's a fine pick, but this is pretty high up there. Again, if this does hold, and then the S&P hits this top trend line, and then the Nasdaq hits this resistance area up here and starts to die off, you can find some staples to short. So again, I think it goes either way. It's going to be an individual basis. I like it long term, but I think if it keeps going this high this quickly, you may want to find some stocks that are super overbought and then prepare to short them. And again, I'm not Mr. Shortest ticker kind of guy. I don't like to bet against companies. But this is a dog-eat-dog world, man. I don't give a shit if someone's like, oh, you shouldn't do that, it's mean. Shut up. You either learn to trade in every single kind of market to make money, or you don't. And I'm preparing to teach my system, and my system does involve bear strategies. So again, makes sense if common staples comes up higher, prepare to short it, because again, this does hold up. This is going to be a nice time to kind of sell and short if it matches the major indexes. Real estate's on its own damn planet. I don't know what this is doing. This is crazy. I mean, real estate, again, is probably one of the least overbought sectors. I mean, it tanked so hard because of COVID. So even though it looks crazy on this time frame, look. If you find the correct real estate stock, like a hospitality kind of ticker that's at a value and this keeps running, that could be crazy. So I'm very bullish on real estate. I think that it fits well. Okay, it fits well into the sector rotation. Now we're far away. All right, we're probably right about here. All right, we're probably right about here. And, you know, these three, right about here, and it's to keep running. So I mean, it's not a perfect pick for sector rotation, but given COVID, this could be a fantastic purchase. So real estate, bullish on. Again, short term could be a little bit bearish if it keeps going up like this, but you know, everything is in its favor. Especially if you're going to swing it for 3 to 6 months, it could be a fantastic purchase. Utilities had a hell of a week and a hell of a month, just ran up like crazy. Now, again, I can even go to FinViz real quick and show you. There are not a lot of utility tickers. There's like, what, 245, 265, I think. There's not a lot. 594. That's the wrong one. Idiot. Yeah, 107. And let's just take out the low volume ones, 500K. You have 56 to choose from. So again, there's not an abundance of utility stocks. And again, there's a lot of different shapes here, but you can see there's a lot of life coming out of these. Now, a lot of them are going to be overbought, right, because of what's been happening. So I'm not going to be overly bullish on them long term or short term. But once these get back down to value, it makes, look at FE. First, I called that before, right down here. It looks good, right? These are kind of getting to value. NEP. Again, let's just check it out real quick. I mean, while we're here. Utility stock. I can't spell, idiot. Look at that. I've been actually, you're apparently tracking already. It's coming down to value. Again, could be a good pick. Utilities, it's overbought for now on the whole sector. So let it come down a little bit. It's hitting this resistance line again, not showing life. Lower highs, lower lows. Let it kind of come down. But again, long term, fantastic picks. But until it gets a little bit lower, a little bit more bearish on it until it gets a little bit lower, given that there's a very, very small supply of tickers. And just looking at those, there was no value. Healthcare is one of those tickers that always prints. Look at that. It was at 30 9 years ago. It's up almost 400% alone. I mean, healthcare is fucking insane. I mean, I don't like swearing that often unless I have to, and I mean, this is a great example of this shit is crazy. I mean, healthcare is such a industry that's never talked about. Then you have your pharma plays and your therapeutics plays, right? Those are always popular, but like a solid therapeutics, pharma, or just healthcare play will almost always yield results equal to financials or to tech. I'm always bullish on healthcare. And again, you may be like, it's really oversold, I don't understand. Well, again, they're overbought, I don't understand. Well, this is, that's crazy. So again, I'm not ever going to be bearish for healthcare long term. And I think up here, you may want to start looking to short some really overbought ones. This is super high up here. But again, in a month, and maybe down here, that you were wrong, idiot. But then in 6 months, I'm pretty damn confident that barring any disaster, will be higher than 124. So very bullish on healthcare. Long term, you may have a small pullback this week. We had a huge push up. You may have a small pullback across all the boards here. But given how happy we are and how this is trajectory going and how the trajectory is, healthcare, always a snack. Last but not least, discretionary is kind of in the middle for real. Because you can see it makes absolutely no sense on our to be buying it over here. We're not buying discretionary stocks, sector rotation wise. But COVID throws a wrench in a lot of this, where you think, you know, restaurant owners are now opening back up, gyms are getting more business, car dealerships may start printing off more cars, where folks can then get back to work and spend money on shit that they don't need. So I don't know this is a terrible pick. It doesn't fit sector rotation, but just like technology, it's below the regression line that I've drawn for now. It wants to load. So again, you have to weigh value or just a lack of volume. What is it, right? So you gotta really do your due diligence. Pick every ticker intelligently, and make sure you do your extra due diligence if they're non-rotations favor, which it isn't. So discretionary, yeah, it makes some sense given the fundamental news, but also sector rotation wise, it makes very little sense to be buying these. And there you guys have it. You're probably thinking, wow, that's a bunch of nerd stuff, I don't really care. That's fine. But if you watched this 30-minute video and you're like, what the hell is this man talking about? Good. You know what that means? It means you, young man or young lady, have stuff to learn. It's going to be very critical for you to learn these kinds of things. So I'm very bullish long-term on everything. And again, long-term doesn't mean this week. Long-term means 6 months to a year from now. I think in a lot of these indexes, especially the S&P, especially something like basic materials or healthcare and real estate, we're getting up there, right? But technical analysis only goes so far. Fundamental analysis only goes so far. And so again, I think the key here to your success is going to come down to your individual due diligence and your choosing of timing your entries. If we're super high up in the S&P and we have not a lot of room to run up and your trigger's on the S&P, you may be buying what looks like a good value, not at a good value. And again, if we're low on technology and your trigger's in the technology sector and the Russell, which are both in good values, barring any disaster or low volume, it could be a good entry. So again, you really have to start balancing of like, look, S&P's high, this is low. Does this have higher lows at least across the board? Does this have more room to run up? Does this follow S&P or the Nasdaq? What's it follow, right? You have to start putting these things all together and taking your time. And again, that's the system that I teach. Everyone else on here, at least a lot of them, are like, yo, check this out, Dogecoin to the moon. Ooh. And they do have that dumb stuff and have this. They have the thumbnails like this, where they're like, that's their thumbnail, right? I don't give a shit about individual tickers. I give a shit about a system that's taught. And that's what I want you guys to learn is to take these little tidbits that I have, take them out of my hands, like DJ Khaled, and put them into your hands. And then that way you guys can take these and make your trading better. If you enjoyed my 30-minute diatribe about indexes and sectors, please like, subscribe, and hit that bell notification. Or Papa give you no kisses. So, have a good rest of your weekend. Tomorrow, a watch list that will blow your mind off, probably, as always. Blow your mind off. Blow your mind, for sure. Have a good rest of your Saturday. We'll see you guys next time. Thanks.